It's Sunday, 2nd of February, and this is your Capital Economics Weekly Briefing. I'm David Wilder. Now, this is a special episode because we are less than 24 hours since Donald Trump announced tariffs on Canada, Mexico, and China. Retaliations have already been pledged by affected countries. Grassroots boycotts have started, and it feels like a global trade war is brewing, the likes of which haven't been seen in nearly a century. But maybe that's just hysteria. Group Chief Economist Neil Shearing is going to tell me if I should cool it, talk about how the global economy is going to be impacted, and where we go from here. Hi there, Neil.
Hi, David.
Quite the weekend. Let's get straight to it. Now, with the caveat that we're recording this at just after 1 o'clock DC time, and it's a fast-moving situation, bring us up to speed on what's happened so far and how that fits with our expectations.
Yeah, so here's what we know. We know as of yesterday that the US is going to impose 25% tariffs on Canada and Mexico, an additional 10% tariff on China. Those are coming into effect on Tuesday. There'll be a partial exemption, we think, for Canadian energy imports to the US. That'll be subject to a lower 10% rate. And it also seems likely that imports to the US from the European Union will be hit with tariffs within the next month or so, from various social media posts by President Trump. Now, ostensibly, these tariffs have been applied as a means of putting pressure on both Canada and Mexico and China to stem the flow of fentanyl into the US. But increasingly, the more you look at it, it seems like that's just a pretext for allowing President Trump to invoke emergency powers, which it seems that these tariffs will be levied using. So the question is, how will other countries respond? We know that all three countries have said that they're either considering retaliation or they have plans drawn up. So that's what we know. There are big questions that remain. Obviously, we're talking on Sunday. It's possible that things could change by Tuesday, which is when these tariffs are due to come into effect. I don't know that that's very likely looking at the situation, but it's possible, I guess. It's also the case that when it comes to retaliation, Canada's outlined some plans to start levying tariffs on perhaps $30 billion of imports from the US, ratcheting higher all the way up to tariffs on over $100 billion of imports to the US. But again, we don't have much in the way of detail in terms of the retaliation from other countries. It does look like it's perhaps a bit harsher than we had anticipated. Now, if you remember, we had factored tariffs into our forecasts already. So we had already factored in a 10% universal tariff on all imports to the US into our forecasts and a 60% tariff on imports from China. So really the big difference with the announcement so far has been the much greater focus on Canada and Mexico and the larger tariffs on Canada and Mexico. But otherwise, I think to a certain extent, the effect of these tariffs are already baked into our forecasts.
Can we talk about the macro effects of what's been announced so far? Assuming that they do go into effect, what does this mean for the North American economies?
Well, a lot, as I say, hinges on how other countries will retaliate. Well, I think we can be reasonably sure that we're going to see a pickup in inflation in the US. Contrary to what the president says, tariffs are paid by importers, and more often than not, the cost of those tariffs are passed on to consumers. That appears to have been the case during the first Trump administration. I suspect it's the case this time too. We suspect that taken together, these tariffs will push US inflation back above 3% by the second half of this year. Now, if that's the case, I don't think you're going to see the Fed hiking on the back of this, not least because it's a one-off step change in prices and the level of prices rather than ongoing inflation, so long as inflation expectations remain anchored. But I do think it perhaps closes the window that was already pretty narrow in terms of further rate cuts in the US. So these tariff announcements could have just been the final nail in the coffin of further rate cuts this year by the Fed. Now, what about Canada and Mexico? Again, depends a little bit on how those countries respond and retaliate, but I suspect both countries are going to be flirting with recession, as in seeing a couple of successive quarters of output falling as a result of these tariffs. It's incredibly disruptive to put tariffs of this order of magnitude within the North American trading system. It's a highly integrated trade system. We've got used to 3 decades of frictionless trade across North America. So to impose tariffs on this scale, I think will cause economic damage, and that will be spread around the North American region. US inflation going up, dollar probably going up too. 2022, US growth slowing towards the second half of this year, perhaps down into the low ones, Q on Q annualized, and perhaps some recessions coming in Canada and Mexico. I think that's the broad picture of what we should expect as a result of these tariffs.
My intro referenced Smoot-Hawley and the 1930s, but do we need some perspective here? Your note last week addressed head-on some of the sort of the hotter takes around what all of these tariffs would mean. Talk a bit about the sort of the risks here, perhaps the overreactions, but also obviously the downside risks, the idea that perhaps we are in a much more dangerous environment.
I think one of the risks in general in punditry and facing economists too is that this is being driven by one person, and that's Donald Trump. So we've got to go try and get inside Donald Trump's head to understand what comes next. So anybody that can tell you with any certainty that they know how this will play out or what's coming down the track is being disingenuous. So that's the first kind of health warning. What can we say beyond that? When you think about the 1930s, we saw a collapse in world trade and also global industrial production. But protectionism was only one factor among many driving that collapse in trade and production. The most important, I think, was the effects of the Great Depression. So collapse in demand across the world's major economies. Protectionism didn't help, but it wasn't the cause, I don't think. So that, I think, offers a bit of reassurance against expecting similar falls in global trade and output. The other important lesson from the 1930s is that it was the response to Smoot-Hawley as much as Smoot-Hawley itself that led to this wave of protectionism. So if it's the case that other countries essentially retaliate, but they do so in a way that is designed to make a political point but minimize the economic damage, it doesn't incur further retaliation by the US, then it may be the case that this vicious spiral into a trade war is averted. So I think that the key thing to watch in the coming days is how are other countries going to retaliate to these measures. That will give us a good sense, I think, of how this is likely to play out.
China's going to be one to watch, isn't it? The Ministry of Commerce statement that we've had so far talked about taking this to the WTO, not sure what that would achieve, but also talked about countermeasures without giving any details. Not much surprise there. But it's notable, isn't it, that China only got hit with 10% tariffs in this announcement. I know our assumption is that 60% tariffs are coming, but certainly for this announcement to go into effect on Tuesday is 10%. What more do you think is coming? And can we take the fact that China got lower tariffs than Canada and Mexico in this round suggest that Trump may be trying to signal greater willingness to work with Beijing by levying this smaller tariff, that there is some kind of deal to be done on trade?
You're right. It's really striking that Mexico and Canada have been the focus in this round of tariffs. I think for all the reasons that we've discussed on this podcast before, it seemed likely that China was going to be the focus. I think the US has genuine grievances against China in terms of widespread subsidies for domestic industry, for example, perhaps not creating a level playing field for global trade. But when it comes to Canada and Mexico, I think particularly Canada, it's very difficult to make the case that they should be singled out for tariff action. So that is something that has come as a genuine surprise to us and to others. Does that mean, though, that China has managed to fly under the radar, that some deal is potentially in the offing, and that there will be no further increases in tariffs on China? I don't think so, no. I mean, as I say, the pretext for imposing these tariffs is about supposedly slowing the flow of fentanyl into the US. It's not about trying to level the playing field when it comes to global trade. So I suspect that more action could be taken against China over the coming months and quarters as the administration starts to try to address some of those grievances. As I say, in our forecast, we've assumed that tariffs could get as high as 60% on all imports from China. And then you're right, it also feeds into this idea of a kind of superpower rivalry. So we've done a lot of work looking at how the US and China, the economic and political relationships are fracturing. And that's causing other countries to have to try and pick a side between the US and China. And in this fractured world, one of America's core strengths is the strength of its relationships with other countries. If you look at which countries that align more naturally to the US and which countries align more naturally to China, most of the large economies are in the US camp, and there's much larger economic diversity within that camp too. The manufacturers, big service-based economies, some commodity producers, large tech firms in that camp, whereas China really has commodity producers and some autocracies on its side. Now, the great risk in this is that as this world fractures, as the US and China pulls apart, America undermines its core advantage in this fractured world, which is to say the strength of its relationships and alliances with other countries, by pushing them away. So if you push Canada and Mexico away, if you're the US, if you push the European Union away, if you start to weaken ties with Japan and Taiwan, then that undermines a core source of American strength in the fractured world. And I think the economic consequences of this fracture become much greater, particularly for the US. So in that sense, America first actually becomes America last.
Thanks, Neil. Neil Shearing there on the Trump tariffs and their regional and global implications. As I said at the top, this is a fast-moving situation and our working assumptions are now being tested as rhetoric becomes reality. Our Trump page remains the go-to for understanding the broad spectrum of implications here. I will link to the page in the podcast notes. Keep referring back to it to see our latest analysis. If these tariffs go ahead, they are going to have widespread implications for the macro outlook, for supply chains, for financial market returns, you name it. If there's any aspect of this situation that you want more direct assistance with from the Economist team, then speak to your account manager and we will get you on a call or into a face-to-face meeting. In the meantime, look out for our ongoing written analysis, online briefings, and more. The weekly briefing will be back next week with more on the Trump trade agenda and its macro market implications, but much more besides. Until then, goodbye. Whilst this podcast is provided with all reasonable skill and care, it comprises the subjective views of our economists. Furthermore, these views are not opinions, nor do they constitute investment or financial advice, or are they guarantees or reassurances to the expected results of any investment products or outcome. You should seek your own specific advice in relation to questions you may have. We will have no liability to you in relation to this podcast whatsoever.